Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. And
Excellent.
there's the disclaimer. And I'm going to share my screen. As I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it. He'll read it back to me. And to give you guys a couple minutes to put those questions in, what we'll do is take a look at our pre-market report, see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. So pre-market report, up top, we have a calendar view, which does allow you to go back in time if you wish to go to a particular historical date and see what happened in a pre-market. Here we do have some summary stats for the past week, just to see if you could eyeball any type of trends. Today we're on January 30th, and so far this is what we have. 291 stocks are trading higher in the pre-market, 480 are trading lower. As far as volume goes, we have 148 million shares trading on up volume, 57 million on down volume. And if we convert that volume to dollar value, we have $2.2 billion worth of stock trading higher, $2 billion worth of stock trading lower. And just from a high level, it looks like a mixed bag, actually. We do have more stocks down, but volume and dollar value looks to be leaning up. So I would say here, pretty much a mixed bag. Let's move down and see if we could get insights from a couple more perspectives. So as we move down, now we have a more detailed list of stock symbols that are trading in the pre-market. And we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. So in this list, we could see the price change, volume, and so forth. If we look down here, there are 45 stocks that made our large gainers list and 75 on our largest decliners list. So that indicates that the trading in the pre-market has a little bit of a bearish lean. And to make this list down here, we do set certain filters and thresholds because things in the pre-market are less liquid, trade with less volume. So we do have thresholds in place for liquidity, price change, volume, and so forth. And if it meets those thresholds, it could make this list. However, keep in mind that any security traded on a major U.S. exchange, if it's trading in pre-market hours, it could make this list. It could be a low cap stock. It could be an ETF. It could be a closed-end fund. It could be a ETF that's inverse, a leveraged ETF. So to narrow down this list further, to a small group of stocks, we could use the filters above. And if you created a watch list of symbols that you like to track, you could use that filter. It'll show you the name of your watch list. You could select it, and it'll use this report to filter out anything that pops up in your watch list. We're going to use this filter here in ETF. And when I click on it, you'll see a drop down menu, and these are ETFs, different ETFs. You could select one of them, and we're going to do the SPY one, which is the S&P 500 ETF. So when you click on that, what happens is the list below, it gets filtered by stocks that are holdings in the SPY ETF, right, which are the S&P 500 constituents. And here we got 8 stocks that made our percentage gainers list. We have 9 stocks on our biggest percentage decliners list. So from this perspective, looks pretty even as far as, bullish and bearish sentiment. A lot of ease on these alerts. So this is indicating to us that these stocks are reporting earnings. They either did it yesterday after the market closed, today before the market opens. They could be releasing their earnings, and stocks will be reacting to that news. So that's showing up over here. So we do have a lot of earnings alerts that these stocks have just released earnings. So we did give it a couple minutes. If we have questions now, I'll take them.
Nothing's popped up, and I know you were planning on actually, Rob may have sent something, just popped up. But it is, just so everyone's aware, it is a big week of earnings. I think the 6 of the Magnificent 7 report this week, so it is a big earnings week for those.
Yeah.
Okay. No questions popped up yet.
Okay. All right, let's go back to SPY. When we don't have questions, I'll just default to SPY and kind of go over some tools people have questions about in the past through emails. And we're going over this specific report over here under options activity. We've been covering it for a couple days, so I'll just continue on it just to finish up how this report works and what these different data elements mean. So quick recap. We talked about that this options activity report tries to summarize the trading volume in the options for SPY. So up top, we see a breakdown of how these options traded with single leg option trades, multi-leg trades, contingent trades. So we could see the breakdown, what percentage of the volume fit into that category. Then we have a breakdown between call and put, how these were executed electronically or floor trade. Then we came down here and it took that volume and started breaking it down a little bit further. This table below breaks it down by option expiration. So we have the option expirations listed on the left-hand side, in order from shortest dated to longest dated. We talked about then that to the right of it, we have the data, analytics, summary stats related to that expiration. So we covered the events that covered it. Yesterday, we talked about that at the money IV. So we took a look at the at the money IV for particular expiration. So one thing here is we do see that there are different at the money IV levels for each expiration, and we could see what the change of that the money IV was from the previous day. Now, if we wanted to go and kind of analyze it further for a specific expiration, you see when it's lit up blue, it means you can click on it. So I think, what did we do yesterday? February 2nd, 12.6. If you click on it, you get charts of how the at the money IV behaved for that expiration. So you could see yesterday, this is how that red line over here, dotted line, was where the at the money IV closed the previous day. And here we see how the at-the-money IV progressed throughout the day, which looks like, bounced around and at the end of the day started ticking up. So that's what it did yesterday. Then next to it, we have a historical at-the-money IV where we could see how this particular expiration, if we captured end of day at implied volatility, at-the-money implied volatility, how it changed from day to day. That's what this chart shows. So from the inception of this particular expiration to now. And keep in mind that an option expiration, it's not like a stock where, gets listed and just continues on forever. Options, they'll get listed, then, monthly option or whatever, weekly option, eventually it expires, that option goes away, and then they list a new option. So this is looking at this particular expiration from the time it got listed, from its inception to now, and this will, on February 2nd, these options will expire and go away. So that's what this is looking at. So, the reason I'm saying is that, some people might ask, well, show me a 10-year history. I'm like, well, this option didn't exist 10 years ago or 5 years ago or 1 year ago or 6 months ago. Could have gotten listed last month, which that's what it looks like. And that's when we started capturing the data for it. So then we go over, that's the at-the-money IVs. So some of these expirations looks like they're just starting to list. We've got zeros. So keep in mind, they'll start listing new expirations, which actually looks like, even in March now, they're doing it almost like a daily. So that's interesting. I think that's different. So let's just stick to that February 2nd at the money IV. Then we go to these next columns of volatility skew. And just to recap, what is volatility skew? If we look at an options chain and we look at a particular expiration, let's say just February 2nd, and we look at the options that are the calls, the puts, and different strikes only for February 2nd, what you'll notice, we could go to the options chain here. If I click on this, I think it'll take me to the options chain. What you'll notice is here's the options chain for February 2nd, because I clicked on it, right? That the implied volatilities, here are the calls, here are the puts, and the implied volatilities of the call and the put next to it. So you'll notice that the implied volatility is different for different strikes and different options. And if we say that the money is right around here, you could see that the implied volatility kind of slopes downward here, slopes upward. So let's go back to the activity here. But, so right here, I'm on February 2nd, so the volatility skew. And there are different ways to measure volatility skew. There's no one right way, or just one way. And when you measure it from different ways, you kind of get a different perspective or from a different angle. So what we did here was to say, okay, essentially, is it sloping up or down, right? And we needed to put in, a metric, one number, two number. You can do a slope, you could do kurtosis, whatever it is. So how is this skew measured? Over here, 3%, 2.5%. Then we're going to click on it and look at it. So if we took that, the money IV, 12.6. So that's what we said, that the at the monies where markets tend to be the tightest and most traded, 12.6. And if we took that number, 12.6, ran it through the Black-Scholes model, and assigned 12.6 to every option on February 2nd, right? Gave it a straight, no skew, straight, 12.6 across the board. If we did that, and then we compared And then we found the 25 delta put and said, well, what is the actual market versus 12.6? Right? So here it says the 25 delta put is 3%. The IV is 3% higher than 12.6. And what is the actual market in the 25 delta call relative to 12.6, relative to that, the money? Well, it's down 2.5%. So what is this telling us? That as we go down 25 delta put, the IV sloped higher, right? Skewed to higher. And as we went on to higher strikes, which is the 25 delta call, the implied volatility declined, right? Slope to the downside. So this is what the skew looks like for February 2nd if we just compare the 25 delta put and the 25 delta call relative to the at the monies. That's what we're doing. These are relative to the at the money IV. So that's what the skew looks like. Or what we do is just get a quick understanding, right? That, okay, the skew looks like, as we go down, IV's ticking up. As we go up, it's taking down by which magnitude. So you could see down here, February 23rd, the 25 delta call put is up 5.6%. The call is down 5.1%. So it gets actually this as we go out further in time, right? The skew's more dominant. It skews more. It
Hey,
looks
D,
like it's flattening. Yeah.
I hate to pull you off the SPY skew and
Yeah.
the important information you're giving us, but we do have a chat that has started, and the questions, I don't know if they're coming to you or towards each other, is about the volatility within an AMD earnings. It's AMD's earnings are after the market today,
Okay.
and ABCD started the conversation on the chat asking about it, and it's led to a couple questions. And the
Okay.
last question, which you may want to take a look at it and help him think about it, is he's asking about the IV is at 100%. Can it increase more?
Okay, I'll come off here.
Yeah, maybe just take a look at it. What
Okay.
you see with. I know that front month straddle. It's probably more the price move than the vol. But
Right. So in AMD, right? Yeah, so it's coming out. Let's see, earnings right here today, January 30th, after the market close. And I think the question is, well, I'm looking at the IV percentile rank, and right now it's at 100% elevated. Does that mean that the implied volatility could increase more? Yes, it could keep increasing. It's kind of like saying, well, a stock hit a 52-week high. Can it increase more? Yeah, it could keep increasing and making a new 52. So what does it mean though, 100%? Right? Because it seems like, well, that's it, 100%, no more. No, it's an IV percentile rank. So what is an IV percentile rank? When we look at implied volatility, right? So we're looking at this 57.7, and we're trying to gauge, okay, so first of all, 30-day IV means that if we created a 30-day at the money option, right? And keep in mind that a stock doesn't always have an exact 30-day, an exact at the money option, right? So like, at the money would mean that we'd have to find an option with $177.83 a strike. If it moves to 170.84, we'd need to find a strike 177.84, 177.85. That doesn't exist. So just like the VIX, we create a synthetic at the money 30-day IV based on all the surrounding data. So it's like you go through this methodology to create it with weighted averages and so forth. So now that we created this 30-day implied volatility, we worked through this methodology and model, and we came up with 57.7. But what does 57.7 mean? Is it high? Is it low? And stocks have different levels. And for some stocks, this could be very low, or some stocks it could be very high. Who knows? Some 57.7 for some stocks, could be on the low end because they're very volatile. So because we don't looking at that number, unless you traded every day and you really know, it's hard to say. So we need some kind of a measurement to tell us, well, how high or low is it? And one way to compare it is to see, well, if I looked at 57.7 and then I compared the end of day implied volatilities for the last 252 days, 1 year of trading. If I compared them, how many of those days were below 57.7? How many days were above? That's what we want. Or how many of those observations, right, out of the 252? So that's one way to get a sense of, where are we at right now? And that's what a percentile rank does. A percentile rank will if you took Excel, right? If you took Excel and you listed 252 observations, right? And what would as a statistician or data analyst, one thing you're going to do is say, okay, list it from highs to lows, right? I want to see it from highs to lows. That's one way to analyze. So if we listed it from highs to lowest, and then we looked at the data and we said, okay, if I took 57.7 and then I look back in history in the last 252 days, and 252 days that's what we chose here. It could go back further, whatever. If I looked at it in the last 252 days, how many of those cells are, how many of those observations are below, right? And then, and as a percentage, right? What percent of them are below? That's what the percentile rank does. So this is saying that if we looked at prior dates, excluding yesterday, if we looked at prior to yesterday, last 252 days, so far, all of them were below. So, okay, but keep in mind that usually implied volatility is lower when there's no earnings, right? So it is going to be high. This is always going to look somewhat higher anyway during earnings because options start to get elevated there. So you probably want to go really start analyzing the earnings IV. But just to give you, since we're on here, right? Let's see. So this is the implied volatility chart for 1 year. So this is the data that it's looking at, right? It's looking at these data points going back 1 year. And then, so you could see this E, right? Those were the earnings. That's when the earnings were. So you could see where those E's are. Those were earning. We have 4 earnings a year here, right? Quarterly. And every time there's an earnings, the 30, you could just visually see it. Their implied volatility is higher, right? So when we look at the IV percentile rank for the last year, it's including all that data, not just those E's. It's including all that data, all right? That's what the IV rank is. It's not an IV rank for earnings. It's just a simple IV rank using all the data. And when we were up here yesterday, it looked like, well, going back in time, all the data looked like it was lower. That's what the IV percentile rank is. Doesn't mean it could go, this could keep going higher and higher. That 100% doesn't mean that it can't go any higher. That's not what it means. It just means compared to the historical data, where's the current observation versus a set of data. That's it. That's what the IVU rank is. However, again, I'm stressing, that on earnings, it's a different story. It wouldn't even be a fair comparison to say, well, show me months where there's no earnings, because you're not comparing. It's a different situation. So you almost want to extract it. And that's why we have over here, this is the earnings section where you start analyzing options, isolating only earnings periods. Okay. That's why we have that earnings section. But I'm almost right up against the close. So hopefully that helped answer the question. And can you unmute, Will?
Yeah, sorry about that, D. That was great and very helpful. We did have a quick question from, I think it was Rick, was asking about gamma. I don't know, maybe we can hit it tomorrow, but he's asking where you find the gamma of a particular option. And everyone was super helpful, giving him different places off the options chain and the profit calculator. If you have any thoughts on that tomorrow, maybe we can hit that too.
All right, yeah, maybe we'll take a look at that tomorrow then and talk about.
All right, perfect.
Okay.
Awesome job, D.
All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade and peace, community.